Welcome back to Alpha Recap, your after-hours rundown of the market's biggest moves. Quick note, as always, if you have questions, you can reach us at stockalpha.ai and use the Q&A feature. Let's get into it.
Great to be here. Today, the tape closed with risk assets nudging higher across the board. Some tech leadership, but also real participation beyond the mega caps.
Right, and just to set the scoreboard, and the number that really caught our eye, the S&P 500 finished up about 0.5%. The Nasdaq 100 was the leader at just under 1%, and the Russell 2000 rallied about 0.5% as well.
So, what really stands out here is that it wasn't just the usual suspects. Tech-led, sure, but small caps and cyclicals actually joined the party.
Exactly. QQQ outperformance reflected momentum from heavyweight tech names, and IWM's gains suggested traders were willing to step into higher beta areas for the day.
And the drivers were overlapping. A mix of big tech momentum, idiosyncratic single-stock catalysts, and some sector rotation into energy and materials.
Let's talk big tech first. Microsoft continued to push the Nasdaq higher. Analysts tied its move to enterprise demand for AI services and cloud resilience. Basically the same growth story that's been supporting tech leadership for months.
Right. And the other thing is hardware names played along. Dell pushed toward another record high as enterprise hardware demand and improving margins kept investors interested.
So you had software, semiconductors, and even hardware all contributing to the tech advance. Momentum indicators were positive on the short-term charts. Analysts noted that. But they also cautioned the next leg depends on macro prints.
Which brings us to retail, the surprise story of the day. Kohl's absolutely popped, spiking as much as 20% after a string of bullish sales updates and analyst checks.
Yeah, that tracks. Best Buy also beat on both the top and bottom line, which fed into the narrative that consumer spending is resilient for select discretionary categories like electronics and home upgrades.
Big move for Kohl's. Honestly, I was a bit surprised by this one.
It was a sharp, single-stock mover, and it helped broaden market breadth. When a retailer moves that hard, it drags the whole consumer discretionary group along.
Exactly. And then there was a clear rotation into energy and parts of industrials and materials. EV and solar narratives, plus some geopolitical talk, pushed commodity and energy-related names higher.
Analysts pointed to investor attention on integrated energy companies and suppliers to EV and solar supply chains. So it wasn't just oil. It was the whole clean energy and battery ecosystem getting flow.
Utilities were interesting too. A handful of utility names saw selective strength tied to grid modernization and solar project announcements. So even defensives were getting reshuffled into green infrastructure exposure.
Materials and mining names also saw activity, especially miners linked to battery metals. There was some M&A chatter and CapEx stories that caught investor interest.
And real estate was mixed. Parts of the REIT space got a lift from AI-related conversions and data center leasing news, while other rate-sensitive REITs lagged.
Crypto and financials were background themes. Crypto-sensitive names saw selective rebounds, and big banks eked out modest gains on the overall risk-on tone, while some regional banks remained idiosyncratic.
There was also an interesting contrast. A big broker note urged caution on small caps, but the market still showed appetite for the small cap trade today. Momentum and analyst views can diverge intraday.
Okay, moving into policy and macro. There were no surprise policy shifts today, but traders kept parsing inflation readings and the labor market resilience.
Analysts are still calling the Fed's path data-dependent. Recent data suggest price pressures are cooling gradually, while the job market remains tighter than pre-pandemic norms.
So the implication was clear. If future data confirm further disinflation without a material weakening in jobs, the odds of more tightening would fall. If not, volatility around rate expectations could come back.
Right. Traders were also watching upcoming Fed speakers and data releases as potential catalysts. For now, the market's tone suggested cautious, data-driven expectations rather than a shift to decisively hawkish pricing.
Let's touch technicals and structure. Breadth was constructive because both the large cap indices and small cap index finished up. Implied volatility eased a bit as buyers stepped back into equities, but single stock volatility stayed elevated around names like Kohl's and some cannabis plays.
Single stock volatility. Not a great friend for index hedges. When individual names swing 20% in a session, market breadth can look healthier than it really is.
Momentum indicators for the major indices are positive in the short term, analysts noted, but the next directional move will hinge on macro prints and upcoming earnings from large cap companies.
Speaking of cannabis, regulatory rescheduling chatter created momentum for that group. Moves were uneven and volatility remained high, though, a classic speculative patch.
Other notable single stock action. Microsoft was a central plank for the Nasdaq. Dell ran toward record highs, Best Buy beat estimates, and Red Rock Resorts popped into view with mixed commentary around leisure recovery.
Short reactions. Big move.
Not what anyone expected.
Yeah, that tracks.
Putting it all together, today's session echoed other times when tech leadership was reinforced by a few mega-cap catalysts while breadth improved because of retail or energy-led pops. Historically, that can either lead to a continuation of risk-on breadth if data cooperate, or a short consolidation if headlines sour.
So what's on the watch list for the next session? Earnings follow through from late-day company commentary, more retail and tech reporters, macro prints that could alter inflation expectations, and Fed speakers.
And sector-specific items. Any cannabis rescheduling developments, energy headlines tied to EV and solar, plus M&A or CapEx news in materials and real estate could drive rotations.
Technically, traders will be watching whether the S&P and Nasdaq can build on today's gains, or if profit-taking appears around recent resistance levels.
Quick takeaways before we go. 1. Tech-led, but breadth improved with small caps and cyclicals participating. 2. Kohl's and Best Buy showed the consumer's selective strength. 3. Energy, materials, and utilities saw thematic flows tied to EV, solar, and grid modernization. 4. Fed commentary and upcoming data remain the key macro watch points. And 5. Single stock volatility is high, so breadth readings require context.
And a reminder, analysts note momentum favored risk-on positioning in the short term, but confirmation from economic signals will be essential to keep that narrative alive.
Final short note. This discussion is for informational purposes only. It does not constitute personalized investment advice or a recommendation to buy, sell, or hold any security. Analysts' views and data were presented to explain what moved markets today.
If you want a recap in writing or charts, head to stockalpha.ai. And if you have questions about anything we covered today, you can ask us directly through the Q&A feature there.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll see you after the next close.